Hello, Gaurav.
Sir, good morning.
Morning.
How are you, sir?
Yeah, I'm good.
Yeah. Sir, any doubts from the previous class?
No, Gaurav.
Okay. I'll quickly share my screen and then we'll start.
Okay.
So, in the last session, we have finished till this point, like instruments to trade. So, these are the instruments that we can trade in our Indian stock market, correct,
Mhm.
sir?
Yes,
Okay.
yes.
So, now let's see the timings. So, there are different market timings for each instrument. Like for
Mm-hmm.
cash and stocks, equity stocks and FNO, the timings are from 9:15 to 3:30. Right.
Mm-hmm.
Mostly on Monday to Friday, or apart from that, if there is any holiday, bank holiday or something like that, then there will be holiday. But mostly it is from Monday to Friday.
Okay.
Currency also we have a like same days, but the timings are a bit different from 9 a.m. till 5 p.m. till the evening.
No.
The ones who are the forex traders who trade in currency, they can trade till 5 p.m. And then we have commodity. So commodity starts in the morning 9 a.m. and it will go till late night around 12 p.m. 12 a.m. actually.
No.
11:55 p.m. 12 a.m. AM actually. So
Mm-hmm.
it's more than 12 hours, right?
Okay.
So here you can trade in gold, silver, crude, natural gas, copper, zinc, all those commodities, right? And this takes place on MCX index. This is MCX index. This is on NSE and BSE.
Mm-hmm.
And currency is on CDS. And there is one more exchange. I don't remember the name, but there is one more exchange, CDS. So there are different exchanges on which this trading happens, right? But when you create a demat account, at that time only you can give a request to the broker that you want to trade in currency or you want to trade in equity or you want to trade in commodity. There at the time only they will give you the access and then you can use it.
Okay.
Okay, now coming on the stocks, there are different types of stocks. They have divided the categories of the stocks, right? So there are basically four
Mm-hmm.
categories: large cap, mid cap, small cap, and penny stocks, right? So they are divided based on their market capitalization, right? The
Mm-hmm.
more the business they are doing, the based on that they have divided the market capitalization, right? So for a
Mm-hmm.
large cap, it's approximately we can consider like more than 20,000 crores. They are considered as a large cap stocks,
Okay.
and if they have a market cap between 5,000 to 20,000 crores, they are considered as mid cap. And market cap less
Mm-hmm.
than 5,000 crores are the small cap stocks. And penny stocks are having very less market cap, like less than 100 crores, like that.
Okay.
Yeah. So, first rule is to invest is like, the large cap are very less risky, right? Because they are the big companies,
Mm-hmm.
the top blue chip
Mm-hmm.
companies. So, these are the less risky. They have
Mm-hmm.
mid cap are almost like medium risky, you can say that. Small caps are risky and penny stocks are highly risky, right?
Mm-hmm.
Because these are basically the very small companies which have just started, right? So they are not yet growing. So that is why they are very risky to invest. So we can follow this kind of rule if you want to invest in this. Let's say you want to invest 1 lakh rupees. Okay, sir. So how you can do
Mm-hmm.
is that you can split your capital among all the four categories. Like 50% you can put in large cap because they are very less risky. And then some
Mm-hmm.
capital you can put in mid cap 25%, 15% in small cap, and very less in 10% in penny stocks because these two are the highly risky things.
Mm-hmm. Okay.
Right? High risk. So that is why we can divide the capital in this. But if you have more risk appetite, then you can change your percentage also. Like let's say there is a young person around 25, 30 years of age. He may be having more risk appetite. What he can do is that he can increase the capital, right? For more return. See, the more the risk, the more is the return in stock market. This is
Yeah.
how it. So if he is looking for more return, then he can increase the percentage here in small cap and penny stocks and can reduce from here to here. He can adjust based on the risk appetite.
Mm-hmm.
Because
Okay.
normally, if you see in large cap are tend to give 12 to 14% per year if you keep it for 5 years.
Mm-hmm.
Mid cap is around 18 to 20%. These two are giving around more than 25% return, right? So
mhm,
the more the return, the more the risk is there, right? So based on your risk appetite and based on those things, you can plan your investments for long term. Similarly, you can plan in even in mutual funds also. You can do like that because in mutual funds also we have different categories: large cap, mid cap, small cap, flexi cap,
mhm,
like balance fund. All
mhm.
these things are there. So based on that, you can decide which funds you want to start the investments. So, sir, right now, are you doing any kind of investments in mutual funds?
No, not it.
Not yet. Okay. So maybe it's a good idea to plan now because this will be good in a long run. If you keep it for
Mhm,
10 to 15 years, you can do the investment, then it will make you a good corpus.
no.
Right. Okay. Okay, so this is clear?
Yes, please.
Okay. Okay, one second. I just want to explain you one more this thing. Okay. So they are different. So this is a basic chart which I just want to explain, right? So types of capital. So basically, there are two types of capital. One is the human capital, other is the asset capital. Asset capital means you are investing the money and it is giving you return. Like if you are investing the money in plots, or if you are giving investing the money in apartments, or if you are investing the
Mhm,
money in stocks or dividend stocks, right? So they are giving you uh, passive in kind of passive income. So that is called as asset capital, basically, right? And what is
mhm,
human capital? The thing with that we are working, right? We are working for somebody or
mhm,
we are working in a company, right? So we are getting salary. So that is basically a
mhm,
part of human capital, right? But both of them are a part of cash flows because we are getting money from both the resources, but we can consider it as
mhm,
a cash flows from both different resources, right? So there are three ways to use this money. Either you are earning from salary or you are earning money from capital gains or dividends. You can spend it based on like 50% based on your expenses, and you can save some percentage around 20%, and then 30% you can invest. So this is a rule, right? 50, 20, 30% rule. So you should
mhm,
always invest the money in some, either in assets or in stocks, or wherever you feel you want to invest. So are you doing any kind of investments, sir, anywhere in like property or real estate or anywhere?
mhm. Mm, oh, yeah, property.
Okay. So you have so you have some assets, maybe, right?
Yeah.
Okay, fine. So this is how the investment rule works. And then we have six cat. If you want to invest in stocks, we have these types of categories in stocks, right? Like the growth stocks, dividend stocks. Any idea about dividends, sir?
Yes, company will give the dividend, some share the property the shareholder.
Yes, yes, correct, correct. Right. So we have blue chip companies, cyclic companies, right? So they have certain cycle, like for 3 months they will earn profit, and remaining 3 months they may not earn profit because of market and all, right? So these are called
Mhm,
cyclic companies. And then we have defensive companies, right? Defensive companies means who are working around the clock, who are getting business around all the times, right? Like FMCG, fast moving consumer group, like ITC,
mhm,
HUL, right? Because they are selling soaps, grocery, and also, but the people
mhm.
use these things all the year, right?
Regular.
All over the year. So that is why they are considered as defensive. Even if you have seen that during the COVID times, also these companies are doing good because they have earned a lot of, they have sold lot of things, online things, and right, home delivery and all, right? So that is why
Mhm,
this sector is called as defensive sector. So we have different sectors in stock market, like IT sector. Maybe we can say that TCS, Wipro, SCL,
mhm,
these are the IT companies. Then we have FMCG, fast moving consumer group like ITC, HUL, right?
mhm,
Then we have auto sector like Tata Motors, Mahindra and Mahindra, Maruti, right? These are the auto companies. Then we have pharma, right?
mhm,
Pharma like Cipla, Lupin,
mhm,
Dr. Reddy, Sun Pharma, right? These are the companies of pharma sector, right? And
mhm,
then we have something called finance, like financial institutions, right? or
mhm,
banks you can say HDFC Bank, ICICI Bank, Muthoot Finance, Chola Mandalam, right?
mhm,
Ram Finance, all these are part of financial institutions, right? Then we have oil and gas category in which we have ONGC, right? We have Reliance, right?
mhm,
And then there is a sector called PSU sector, we call it like public sector unit, which has like BHEL, BHEL, Oil India, right? NMDC
mhm, mhm,
and IOC,
mhm.
BPCL, all these are the part of PSU. So these are the most of the common sectors which are available in the stock market to you can do the investments based on your appetite, right? Okay, so this chart is clear.
Yes, yes.
Okay, so this is about the dividend investing. How they invest, the companies will give you the companies earn profit, and based on the profit, they will share the profits with the shareholders. So it depends on the
Mhm,
company to company how they are distributing the dividends. Some company distribute the dividends on every quarter, or some company distribute the dividends only on 6 month basis, or some companies will do it once in a year. So some companies which are giving dividends right now are IOC. Mostly the PSU companies are giving the dividends, right? IOC,
mhm,
BPCL,
mhm,
HPCL,
mhm.
ONGC, right? So these are the top companies which are giving good dividends to the shareholders. So if you are thinking to invest in dividend rated companies, then you can start investment in these companies also, right? So there are different dividend yields for these companies that I will
Okay.
show you in a software when you can check all the details of the each company, right?
No.
Fine, I'll just share that software 1 second. So there is a website called screener.in. So you may need to create a free user ID on that. I'll
Mhm.
just share my screen wherein you can check all the details related to website. So this is screener.in. So have you used this website earlier?
No.
Okay. Fine. So let's say I want to search a company called IOC. So I'll just enter the name here, Indian Oil Corporation. And now it
Mhm,
will show me all the data of the company, right? All the fundamental data, everything it will show to me, right? Like the
mhm,
market capitalization of this company, right? Two lakh
mhm,
17,622 crores, right? The current price 154, right? And if you want to see the dividend yield, it is showing 1.95%, right? Right. And there are certain other parameters that you can check, like debt, right?
yeah, dividend, if that declaring tomorrow, if I invest today,
Uh,
the way says today.
See, there is a thing called X dividend date,
Oh.
on which the dividend will be paid on which you are eligible to get the dividend. Based on the date, you have to plan. Let's say the date is today, right? Today is 11th, maybe. What is the date today? So today is 13th of October, right? If a company is having the ex dividend date of 13th of October, then you have to be a shareholder on this date. Then
Mhm,
only the company will
mhm,
give you the dividend.
mhm, mhm.
So like that. So this is ex dividend date. You have to remember the dates, right? So these dates you can check. These dates you can check maybe on money control, or you can even check in your demat account, right? Because in
Mhm.
demat account, once you go to stock, I will show you in demat account also. 1 second. Let me log into my demat account. Okay. So let's say this is actually zero, the So if I want to
Mhm.
see the details of a stock, I'll just put the name here, and here I can see the plus icon. I'll just add that stock here, and then
Mhm.
once I click here, it will show me the fundamentals, right? So I have to go to
Mhm.
fundamentals, and here you can see all the details of this company also, right? The overview. It will tell you about the company, what is the company and all, right? Here it will show you the market cap and the type of stock, which is large cap, right?
Mhm.
And once you go to events, here it will show you, see, dividend of rupees 3 per share, right? X date was 8th
Mhm.
of August. So this company declared a dividend on 8th of August. So you should have been a shareholder on this date, then only you are eligible to get the dividend, right? So this is 3 rupees per share means
Okay.
if you have purchased one stock of 154 rupees
Yeah,
on that day,
dividend declared on August 8th, right?
August, 8th of August,
Okay.
yes.
Okay. If I buy the shares on 7th of August, I'll be eligible.
Yes, 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 correct. So if you want to see the history, you can see the history, right? Last year they have declared the dividend of 7 rupees in the month of July. Right?
Mhm.
Similarly, in 2023, they have declared the dividend of 5 rupees on November 2023. So if you want to see the history, so here you can see the history also, right?
Mhm.
So here they have given a bonus also, right? One bonus shares for every two held. So if you had two shares of IOC, you will get one stock extra for IOC. So this is called
Okay.
bonus. So some companies
Mhm.
which will give you sometimes bonus also, right? Like
Mhm.
1:1 or 2:1 or 3:1 based on their thinking, their decisions,
Mhm.
they will give you bonuses, right? So all the details of the event you can see here. So when they are declaring the results, right, the quarterly results and all, they will show you the they will show you the dates here. Right? You can see that quarterly results every time. 29th of August, June, January 2021, right? So all the corporate announcements details you can see here once you go to events, right? So corporate actions. And if you want to see the news related to this stock, you can go to news and see like what is happening in these stocks, right?
Mhm.
All these things you can watch here. Right? Next is financials. So if you want to see how was the result for previous quarter and all those things, you can check the financial summary also here, right? Like in the month of, if you want to see the yearly result, you can see here, right? In the month of March 2023 for 1 year, they have reported 8,41,746 sales, right? Here is the sales, operating profit, net profit, all the things are shown here, right? You can check these things, correct? And then we have shareholding patterns, right? Means how much
Mhm.
percentage they are holding the share. Like promoter is holding how much? On March
Mhm.
2025, they are holding 51%. FIS, foreign investors, they are holding 7.39%. DIS, domestic investors, they are holding 9.97%. And retail category like like us who are small shareholders and all, they are holding
Mhm.
6.15%, right? So this is how you can see the shareholding pattern also, right?
Mhm.
And then we have peers. Peers means the competitors of the same company, right? Who are the
Mhm.
competitors of IOC? BPCL, Hindustan Petroleum, MRPL, right? So it will show you all the details. See here, it is having the IOC is having the highest market cap among all the peers, right?
Mhm.
Right. Here it is showing you ROCE. This is return on capital employed. Matlab, how much you have invested based on that they have given you the returns, right? Return of capital employed, correct?
Mhm.
And then
Is it a percentage earned on the market capital or the?
no, no, no. It is like whatever amount you have invested, right? So based on that, it will show you the return here.
Mhm.
And then we have PE, right? This is price to earnings.
Mhm.
So this price to earnings will decide how costly is a company or a stock or how cheap it is the stock, right? So
mhm.
if you compare these three, right, IOC, BPCI, Hindustan Petroleum, so this is having the least P, means this is the cheapest among all the three stocks. Price to earnings mainly goes from 1 to 20, but some sectors which are highly expensive, like insurance sector, right? They always have more P's, right? 50, 60 P's like that. But normally, if you see to a normal business, they are having a P within the range of 1 to 20.
Can you explain what is P?
Huh? Sorry?
Can you explain in detail what is P?
P, okay.
Yeah.
So P is basically the price to earning ratio. Price to earning
Mm,
ratio, right? So this is basically a ratio which decides how expensive or how cheap is the company, like the price of the company, right? How cheap or
mhm,
how expensive is the price of the company, right? So there is a formula to calculate the P.
mhm.
I'll just
Yeah, how it is different from the return on investment, ROC?
see, that is a percentage based on the investments
If
you
I
have done,
invested
right?
yeah, 1 lakh, then I'll get a 7,800 rupees
Ha, ha, ha.
return
Hmm.
in a
Yeah,
year, right?
yeah, yeah.
Uh,
But P is basically for the fundamental of the company to decide whether the stock is expensive or the stock is cheap.
mhm,
Let's say you want to invest. Okay, let's say you want to invest in these companies. How you will
mhm,
decide? So there are two ways to decide. First is you can check through fundamentals, which is through P, or we can
mhm,
check through technicals, which is chart. So which we will talk about in the further classes, technicals, right?
mhm,
So this is a fundamental way to check whether which stock you should invest on the same category, right? So this is the which category? This is refinery category, right?
mhm,
So if I want to decide which stock should I invest, then as per the PE, this is the cheapest stock, which is 8.48.
mhm,
Okay. The price will not decide. The price will not decide. See, the price is like a thing that you can see only, but there are many other things that decide whether the company is cheap or expensive. Like if you want to see the sales, right, profits, all those things you have to see to consider whether the company is doing good or bad, or whether the company is cheap or expensive, right? The
mhm,
valuation basically. This is called as the checking the valuation of a company,
mhm.
right? So PE is one of the parameter to decide the valuation of a company.
Okay. Then what is D?
Sorry.
D, last column.
Okay, D. This is debt to equity ratio.
Mhm,
Based on the debt and the number of equities, they try to filter out the debt to equity ratio. So in this, we have to see the one which is having the least debt to equity ratio, because debt means they are having some loans, right?
mhm,
So debt to equity ratio, we have to see whichever company is having the least debt to equity, or whichever company is having the less debt, that we have to put my money in that, because they have less
Yeah,
loans, right?
that means Hindustan Petroleum is a 1 lakh crore. The debt is a one lakh 30,000.
No, this is not in, see, this is not in money, right? This is not in lakhs or
Mhm,
crores, right? This is a percentage
mhm.
they have calculated. So,
Okay.
like, it can go to 1 to 5, right? Or it can go to
Mhm,
0 also. Sorry, it can go to from 0 to 5. The company which is having the 0, see, in
mhm,
this, if you see that, this is having the least, right? 0.64.
mhm.
So, that means it is the best to invest in based
Okay.
on the debt to equity ratio.
Mhm,
See, this software is very smart. It has marked the star also, right? You can see that.
mhm,
So the parameters which are pretty good, this software marks the star based on that, and then you can decide. So, like if you see here for BPCL, these three are the parameters which are showing the best thing, right? P is also
yes.
best, ROC is also good, and the debt to equity ratio is also good. So that means right now this is the best company to invest among all the four. Right? So you have to consider multiple parameters to decide which company you want to invest if they are fundamentals. Fundamentals, there
Yeah.
are thousands of parameters to consider, but these are the main things that we can see.
Mhm.
Right? This is clear, sir.
Yeah.
Okay. Okay, so here you can see this kind of uh, information for any company, right? So similarly, in this software also there are many things, but we are not going in deep based on the fundamentals. Where is that? But what you can do is that you can try to explore the software and then you can see what all things are there. Correct. Like here it will show you all the debt to equity ratio. So many parameters are there, right? So based on so apart from PE, there is one more thing called industry PE, right? So
Mhm.
similarly, the PE for a company is there, and similarly they have a PE for the whole industry, right? So that also you can check. And then this is an important parameter to check promoter holding and pledge percentage, right?
Okay.
This you can check. The pledge percentage has to be zero. They should not put at loan of the company. They should not have put the shares to
Mhm.
somebody else, right? So that is called pledge percentage. So these are the things you can take a look and you can explore. And if you have any doubt, then you can ask me like afterwards.
Okay.
Okay. Okay. Now next we'll move on to the slide. Okay. So Nifty 50, there is one formula which I will explain you how to use it, right? So how each stock contribute in Nifty 50, right? So there are 50 stocks. Each stock is having a different percentage who contribute in Nifty 50, correct? So the top ones
Mhm.
are HDFC Bank,
Mhm.
which contributes around 13% weightage, ICICI Bank 8.4, Reliance Industries 8.2, Infosys 4.7, Bharti 4.5, ITC 3.2, and HUL 2%, right?
Mhm.
Okay, so how to calculate the percentage being added or the number of points being added in Nifty based on the each stock movement, right?
Mhm.
So let's say HDFC moves 1%, right?
Mhm.
So 1% into the weightage into the value of Nifty. So I have considered the value of Nifty is 25,000 right now, correct?
Mhm.
So the percentage move into weightage into Nifty value. So it is coming around 32.5 points, right?
Okay.
So that means 32.5 points will be added to Nifty. So now Nifty will become 25, 0, 32.5, right?
Mhm.
So similarly, if Reliance Industries moves 1%, then it will add 20.5 points to the Nifty. So that means it will add here more to 20.5 points. So like this, every stock in Nifty 50, all the 50 stocks are having different weightages, and based on that, based on the percentage movement in those stocks, it will get added to Nifty 50. And this is how Nifty 50 moves up and down.
Mhm.
So after that, it will add total index change and it is showing me 106.5 points. So that means the Nifty will be 25,000 plus 106.5 points, correct? So this is how the movement happens in Nifty 50. Even if you see Sensex also, right? Sensex has 30 stocks. So based on the percentage, the movement will happen in Sensex as well. So this is how all the indexes will move based on the components of its indexes, right? Fine, this is clear.
Yes, clear. Yeah, what is the how the Nifty is 25,000 and Sensex is 80,000.
See, yeah, that's
The
what.
stocks.
See, it depends on the stock which are there, because in Sensex there are 30 stocks and here we have 50
Mhm,
stocks. So the percentage will be more in Sensex for each stock. Here the percentage may be less.
mhm.
So all depends on the constituents of that index and the percentage they are being
Okay,
given.
okay.
Okay. Okay. Now coming on to the types of types of trading. So there are basically three categories of trading or three types of traders you can say in this market, right?
Mhm,
Scalping, scalping, intraday trading, and positional trading. Scalping is like they are very, very big players which are doing for 1 to 5 minutes. So they will enter and exit within 1 to 5 minutes. They are called as scalpers.
okay.
So they will take very less points because they are having more capital, right? They may be having 5 to 10 crores of capital, correct? So they will play
Mhm,
for 1, 2, 3 points and then they will exit. So maximum 1 to 5 minutes, their trade will last, right? Then intraday. Intraday, like we have timings from 9:15 to 3:30, right? So intraday
mhm,
traders are those traders who take entry within this time and exit. Entry and exit within the same time period they do. They are called intraday traders.
mhm.
9:15 to 3:30. Then we have positional trading. Like if you want to take the trade for more than 1 day, that is called as positional trading, right? If you are taking the trade for 1 day, that is called as BTST, means buy today, sell tomorrow.
Mhm. Okay.
Buy today, sell tomorrow, right? So this is called BTST.
Mhm,
And then if you want to take the trade for more than 1 day, it is called as short term, like 1 to 3 months. If you want to take medium term is like from 3 to 6 months if you want to carry, and long term is more than 6 months. Right? So this is a category they have formed: short term, medium term, and long term. Okay, this is clear, sir.
yeah.
Okay. Okay. So apart from trading, we have many important things in this thing: risk management and money management. Also, we have to do along with trading, right? So,
Yeah.
sir, any idea how you can do risk management?
No.
Okay, fine. So there are two things that we can do in risk management. So we have to plan our trade, right? To plan our trade, we have to see many things. So they are basically these parameters which are important, right? Let's say you want to take an entry in a stock, okay? You want to buy a stock, right? So what you have to decide first, you have to decide the entry price, right? At what price you
Mhm,
want to buy, right? First you have to decide the entry, or you can say that buying price, right?
mhm,
First you have to decide the buying price. Second is you have to decide your targets, like whenever you want to book the profits, right? Target price.
mhm.
Third thing is very important, stop loss. Any ideas sir about a stop loss?
Yeah, if sales goes down,
Hmm.
I should put a stop loss so it will sell
Uh,
automatically.
right. You can say that just you want to we can say that uh, insurance against your trade. You can say that insurance against your trade, right? If let's
Mhm,
say your entry price is 100, your target price is 120, So you have to keep one stop loss, maybe 90 or 95 you can keep. If the stock goes below this, you have to book your losses.
uh, yes.
So you have to plan both the directions, up as well as down, because this is stock market. We don't know like whether the stock will 100% go up. There is no 100% guarantee in stock market, right? So based on the
Mm,
technical analysis and fundamental analysis, we have to see, plan these things, right? So stop loss, entry price, and target price. These three things are very important. Stop loss is the most important thing that we have to follow,
mm,
right? And then we have trailing stop loss, right? So how it works? Let's say your entry point is 100. Okay.
mm,
Your target price is 130. Your stop loss is 95. Okay. So let's say now your stock moves to 120. Okay.
mm,
So what you have to do, you have to move your stop loss from 95 to 100 or 110. You have to change it because your prices
mm,
has already moved towards the upside, right? You have to change your stop loss
mm,
from 95 to 100 or 110 based on your risk appetite. So this is called as trailing stop loss.
mm.
Okay. So these are the four very important parameters that you should use, remember, and plan in trading. Entry price, target price, stop loss, trailing stop loss. It's clear, sir?
Yeah.
Okay. And then we have risk and reward ratio, right? See how much we have to keep the risk, how much we have to keep the reward. See, these all things will be done based on technical analysis only that we will talk about in the future lectures. But these
Mm,
things are very important to plan first, right? Risk and reward ratio means, let's say you are thinking to get 10 rupees as profit, right?
mm,
So you have to plan your risk as well here, right, sir? So if you want to take a risk reward of 1 is to 2 ratio, then you have to put your stop loss as 5 and target is 10. That means you are having a risk reward ratio of 1 is to 2, right?
mm,
Similarly, if you want risk reward ratio of 1 is to 3, then you can think like 5 rupees stop loss and 15 rupees target. And if you want a risk reward ratio of 1 is to 1, then 5 rupees will be your stop loss and 5 rupees will be your target. Right? So scalpers, they mostly work on 1 is to 1.
okay.
Intraday traders mostly work on 1 is to 2. But some intraday traders work on 1 on 1 also. But
Mm,
positional trading, most of the positional trades are because they are taking risk, right, for more time. They are putting money for more
mm,
time. So they are expecting more risk and reward ratio, right? So they work on mostly these two categories.
mm,
Based on the capital you are using, it depends on the risk reward ratio. Let's say you are using more capital, right? Like
mm,
50 lakhs or 1 crores. Like, see,
mm,
for me, I am a trader, and if I am using a capital of 50 lakhs, then I will not
mm,
wait for more than 3 to 5% of profit,
mm,
which I will get within maybe 1 to 3 months if my choice was correct. If I have done a good technical analysis, within 1 to 3 months, I am getting 3 to 5%. That means I am, I am getting a good returns within 1 to 3 months, right? So it depends on
mm,
the capital also, because if you have a huge capital, then you may not wait for long time, right? For long return, like
mm.
20%, 50% like that, right?
Yes.
Because you are a trader. If you are an investor, then it is fine. You can invest more capital in more stocks or mutual fund. But if you are a trader, so you have to plan your
Mm,
trades accordingly. Risk and reward ratio is very important in trading. So planning is very important. The thing is that most of the traders don't do any kind of planning. They will simply take an entry. They will decide the target price. They will not decide the stop loss, and their trade will get stuck.
mm.
Right? So these things, risk management is very important in trading. So this is the overall plan for risk management that you should think in each and every trade.